I just spent the last month testing the RSI indicator on 54 different assets, on 3 different timeframes, on 42 different settings to find out if this indicator is really worth all the hype. Hi friends, if we haven't met, I'm Lisa, a data scientist turned algorithmic trader, and I don't make decisions based on what other people say. I test ideas thoroughly and then use data to decide. So this experiment used 12 strategies, 2,285,333 trades over 70 years, and the link to download the results is in the spreadsheet below. So the RSI indicator was invented in 1978 by this guy, J. Wells Wilder Jr., in the book New Concepts in Technical Trading System. It's a momentum oscillator that ranges from 0 to 100. So traditionally, when the RSI is above 70, then the market is overbought and there is a potential reversal downwards. And when the RSI is below 30, that means the market is potentially oversold and there is a potential reversal upwards. So the formula for the RSI is a little bit complicated, and honestly, I don't care because all charting tools can do it automatically for you. I've got here an example chart. At the top, I've got the price movement shown in the candlesticks, and at the bottom, I've got the RSI indicator with the default settings of 14. And I've already drawn 2 lines on this chart. Remember, the boundaries of this line is 0 to 100. So the top line here is 70, and at the bottom, we've got the symmetrical line of a value 30. What we're looking for is times when the RSI, this yellow jagged line, goes above the 70 level or below the 30 level. Now, in this particular chart, I don't see any instances when it is going below 30, but I see 4 times that it is going above 70. 1, 2, 3, and 4. So let's take a look at this first example here. Here the RSI is going above 70, so we go up here, and here we're looking for a reversal from the upwards direction into the downwards direction. So we would take a sell about here and then see the price is going down. Same with this area here. The RSI is going above 70. So above we would place a sell trade, and again this is going down. This happens here again, and here we're looking for a sell trade. However, this one is a false signal, and we can see we want the price to go down, but instead the price is going up. And finally here it is going past the 70 level again, and we go up. Again, another false signal, and we can see the price is going up for a fair bit before it decides to go down again. Notice there are 3 numbers on this chart: 70, 30, and 14. And we can change these numbers. Instead of 70 and 30, we can use 90 and 10. And instead of 14, we can use 6 instead. But what's the best value? That's what I wanted to find out. What's the best asset to trade on? What settings should I use? What time frame should I use? So I designed an experiment to find out. And here are the rules of the experiment. First of all, the data. So we are going to use 17 years of data. We are going to test with 1-minute tick data accuracy, and the source of the data is going to be Dukascopy. I will be testing all these strategies on 3 different timeframes: the 1 hour, the 4 hour, and the daily time frame. Normally, when I build my strategies, I always include commissions, swaps, spread, and slippage. But for this experiment only, I'm going to take them all out because I just want to see the raw power of the RSI indicator without all the fees. Here I have all the assets that I will be testing on. I have Forex, I have metals, I have commodities, I have indices, and I have crypto. For the entry criteria, let's keep it simple. For a long entry, we're going to enter when the RSI is below a certain level, and we're going to do the opposite for the short entry. So when the RSI is above a certain level. And for all those entries, I am going to combine them with 4 different exit types. The first exit type is the opposite signal. So for example, if we're taking an entry based on going below the RSI level, then to exit, we would exit based on the opposite direction when the RSI goes above a certain level. We're also going to test the same entries with a 5-bar exit, with a mean reversion type exit. And when I say mean reversion, we want the take profit to be smaller than the stop loss. So here we're going to use a 2 times ATR and a 4 times ATR for the take profit and stop loss. And we're also going to test out a trend following types of stop loss where the take profit is bigger than the stop loss. So we're going to reverse the numbers around. Our take profit is going to be 4 times the ATR and our stop loss is going to be 2 times the ATR. I will be testing longs separately, shorts separately, and I will also have a strategy where we are also trading longs and shorts, where the rules will be the opposite and symmetrical for both the longs and shorts. So combining all the different variations, we have our entry, we have our exit, and we have our direction, making 12 total different strategies. And don't worry about the number combination. Obviously, I cannot count. OPP means taking the opposite trade for the exit. 5 bar means 5 bar exit. MR means mean reversion. TF means trend following. And L means long direction. S means short direction. And LS means both long and short. To figure out the best settings for each strategy, I'm going to use a special technique called walk forward optimization. And if you're not familiar with walk forward optimization, here I've got a chart showing the timeline for each year from 2013 to 2019. We're going to take the first 2 years, for example, 2013, 2014, take the data, optimize our strategy based on 2 years of data, find the best settings that make the most profit during those 2 years, and then take those settings and apply it to 2015 and trade those settings for 1 year. And I'm going to repeat the process every single year until I reach the end, which is mid-2025. For the optimization values, we are going to keep it simple and limit it to 2 parameters only. First is the RSI, and we're going to start at 2, go up to 14 in a step of 2. Next is the levels. So we're now going to start at 5, go up to 30, and we're going to increment in a step of 5. And this is going to be symmetrical. For example, if we choose 30 as our level, the opposite will be 70. If we choose 10, then the opposite will be 90. And I'll show you exactly how to achieve that. Remember, this is an experiment. This is not a complete strategy. There are so many things wrong with this. We have no commissions, swaps, spreads. Our entry criteria is a bit random. Our exit criteria is also a bit random, and there are no filters. The whole point of this experiment is to get a feel for what works in terms of settings, what works in terms of different assets, and to get ideas for future strategy building. If you're a good trader, you might want to check out Darwinex Zero. If you're not familiar with them, they are a platform designed to reward good traders. You can get a simulated 100K account to trade and earn money from your trading. And currently there are a total of 4 different ways to make money in Darwinex. In silver stage, you can get between 30 and 375K in allocation, and you get to keep it for 3 months. In gold stage, you can receive up to 500K in allocation and keep it for 6 months. Next, there's investor capital, where you can get into the millions and millions of dollars. And then finally, the 100K permanent allocation, which splits into the instant allocation and the performance-based allocation. These 4 different options are stackable, so you can get silver, gold, investor capital, and permanent allocation all in the one account. I've been personally trading with Darwinex for a year and a half, and I've received multiple payouts from them and made it into Darwinia Gold. So if you're a trader and want to make some extra money, then I do have a discount code below if you decide to sign up. Thanks Darwinex for sponsoring this video. For the tool, I will be using something called Strategy Quant X that allows you to build strategies without needing to know any code. This is their website. They do have a 14-day free trial. I also have a discount link below if you decide to buy it in the future. So let's get started. I've already kicked off Strategy Quant X, and we're going to build all this without any code. On the bottom left, click on Algo Wizard, and we're going to create a new strategy. Give the strategy a name. I'm going to go with the full editor and press select. See this section in the middle? This is where we define our long entry signal. So select add first condition, and we're going to search for the word RSI. Scroll down, I've got here RSI is rising, RSI is falling. We want it to be lower than a specific level, so select that. Now we've got a little box that will let us define our strategy. So the default value for period is 14. I don't want that. I want to be able to optimize it. So I'm going to create a new variable. I'm going to call that RSI P for period. And then for level, I'm going to say, create a new variable again, RSI LVL for level. Create and confirm. And that is our long entry signal created successfully. We want to enter when the RSI is below a certain level. Creating the short entry signal is a little bit more complicated because I want to be able to use the exact same variables but make it symmetrical. To start off, select add condition. We're going to start with a greater than sign. So select is greater. Press confirm, and then now you can see there's a left value, a greater than sign, and a right value. Click on the right value, and then now we're going to look for a minus sign. Press confirm, and now we've got a left value for the minus sign and a right value for the minus sign. So select the inside right, and we're going to use a number. And instead of setting our number here, we're going to use our variable. We're going to use RSI level, confirm. And for the left number, we're going to use also a number. And this number will be 100. And this is how we get our symmetry. So for our long entry, we've just got the level. For our short entry, we've got 100 minus the level. There's only one thing left to do, and that's to set the left value. So we want to set it to the relative strength index. And the period, again, we're going to use the RSI P value, confirm. That's our long entry and our short entry created without any code so far. If we want to create our exit criteria, I can duplicate this and drag this to the long exit and duplicate the top value and drag it into the short exit. What I've just done is I've created strategy number 15, where the RSI is the entry criteria, the opposite signal is the exit criteria, and we're going both long and shorts. What if we wanted to change the exit criteria? So let's remove these. What if we wanted to use the 5-bar exit? So see here, go to exit after bars and select that to 5. Switch over to the short entry tab, exit after bars, 5. Pretty straightforward. If we want to change it to the profit target and stop loss, again, I'm going to change it to ATR based value 2, 4. And this is the exit criteria for the mean reversion. To use the trend following, we just reverse the numbers. And now here are the settings for the trend following strategy. I will go offline and create the rest of the strategies, but you saw how easy it is to switch between the opposite signal, the 5-bar exit, the mean reversion exit, and the trend following exit. A few minutes later, I have created all the strategies and I've saved them to SQX format. What I need to do next is test all those strategies on 3 different timeframes over all these assets, and I'm not going to do it manually. Because Strategy Quant has something called custom projects where you can create a workflow and have the entire process fully automated, and this is the banana workflow which I do share with the members of my Algo Lab. So I'm going to use this workflow to run walk-forward optimization on all these assets and these timeframes. 2 weeks later. Finally, the process is complete. It took about 2 weeks because there were 12 strategies and I was doing 1 strategy per day. The rest of the automation process was not too bad. So here is the results of one of my runs. This is testing the file number 15, which is the first strategy you saw me create, and I've already sorted it by net profit. Notice that all these columns here are in green. So the slight tinge of green means these are all out of sample results. I've already sorted everything by net profit, so I can see the most profitable symbols and a small equity curve of the out of sample period. Let's look at one of these strategies. When you double click on one of the results, this is what you get in the Walk Forward Results tab. And the key column we want to see is the parameters column here. The other important ones is the in sample period and the out of sample period. But I just want to understand what parameters have worked best for this particular strategy, which is using the opposite entry as the exit. We're going both longs and shorts, and we are trading on the Aussie Singapore dollar on the 1 hour time frame. So let's take an eyeball down this parameters chart. Most of the values for the RSI is 2, which means that overall for this particular strategy, having a lower RSI value has been profitable. And in terms of the RSI level, I see about 30 and 25 consistently here. So we want larger RSI level values for the most profits. Let's take a look at another strategy at random. Let's take a look at US 500. And the parameters again, RSI 222, they're all 2s this time, and the RSI levels is consistent at about 30 to 25. So it's great to see consistency across multiple time frames and multiple symbols. What I'm going to do next is extract all these columns down below to an Excel spreadsheet so I can do more analysis. Ta-da! Don't you just love Excel? I've extracted everything so you can see all the columns straight from Strategy Quant. And the key columns I'm looking for is column B. So this is where we're going to find out what entry and exit criteria and what direction we're using. So OPP, I know this strategy uses the opposite direction for the exit. L means long, S means short, and LS means long short. And in column I, you've got the total number of trades. So if I select that, and at the bottom, I can see there are a total of 2,285,333 total trades with 1,945 total strategies tested. To make it easier for you to see the trends in the data, I've gone and I've created charts with the data already. So the first chart that I've got here, I've got it split by type. So I've got commodities, Forex, crypto, indices, and metals on the x-axis, and on the y-axis I've got the average net profit of the walk forward optimization. So we can see straight away Forex and indices seem to be making the most profit. Crypto and metals not so much, but let's go in a little bit deeper and see if we can find out more information than just the broad categories. I've now gone and added direction to the chart. So let's take a look at the data. I'm going to ignore commodities and crypto for now because there isn't much data there. Let's start with Forex. So Forex, I've got long shorts and shorts. And we can see that going long only or both long and shorts is the most profitable when we're talking about Forex. Just having a short strategy is not as profitable, but generally Forex is pretty symmetrical, so I'm not surprised at the data here. Indices, on the other hand, I know that indices does have a long bias, so I'm not surprised that the short only strategy is quite the loser. Longs only strategies seem to work well, and long and short strategies does have a slight edge. For metals, I know gold has a slight long bias as well, which is why longs makes up so much profit, and the shorts, again, similar to indices, we are losing money if we just traded in the short direction. Let's cut the data again. Now we're looking at time frame. Let's look at Forex. So we've got now the daily, 1 hour and 4 hour. And according to this data, the 1 hour time frame is the most profitable for Forex and indices and metals and crypto. And I have one more chart for you. Now we are cutting the data by exit. So we've got 5-bar exit, mean reversion exit, the opposite signal exit, and the trend following exit. And for Forex, I noticed that taking the opposite signal as an exit, and the 5-bar exit seems to work the best. For indices, taking the opposite exit seems to be quite profitable. Also, surprisingly, the trend following exit is also quite profitable. If you want to download the results spreadsheet so you can do your own analysis, the link will be available below. Today, I used a tool called Strategy Quant to create a strategy from scratch, and I did it without any code at all. If you want to learn more about creating strategies without any code at all, then watch this video right here. Thanks. Bye.